Hey everybody, welcome to the finance planning session. As you're joining us, if you want to drop in the chat your name, where you're coming from, your LinkedIn, that would be great. We're gonna kick off in about 30 seconds just to give everyone a chance to filter into the room. But would love to hear from you. Okay, I'm gonna get us started. As we know, people will be filtering in from break, hopefully from Jason's really good talk that kicked us off this morning. I'm Lisa with Lettuce. It is my pleasure to welcome you to the Finance Planning Lettuce Talk Money session. I'm thrilled all of you are here. No offense to our incredible panel, but maybe finance planning isn't always the most exciting part of running a solo business, but we at Lettuce obviously believe it's incredibly important. As we head into 2026, this is your moment to set the financial foundation for your best year yet. The difference between solopreneurs who get by and those who build wealth, they treat their finances like a strategic asset, not an afterthought. So congratulations to all of you for joining us and believing that. You think that, like a CEO, you're using your numbers to make smart decisions, minimize taxes, and plan for the future that you actually want. And that's where Lettuce comes in. We built our platform specifically for solos like you. Your business doesn't look like a traditional company, and your finance tools shouldn't either. So from S-corp selections that save you thousands in taxes to automated bookkeeping that turns your financial data into actionable insights, Lettuce helps you operate with the sophistication of a CFO, even when you're a team of one. So here's some great news. If you've been thinking about making a switch to an S-corp, we at Lettuce are making that easier than ever. You can sign up now and pay nothing until January 1st, 2026, when your S-corp election begins. You get to maximize all of 2026 to maximize your tax savings with clean, simple accounting from day one. So with that, let's dive deeper actually in the financial strategies you can also employ in the new year. We've assembled an incredible panel. Kevin Forsyth is our product marketing lead at Lettuce. He helps solos understand how to leverage those financial tools on our behalf every day, and he's going to moderate this session. Ryan Page is founder of Backpocket CPA, and he helps businesses turn messy books into powerful insights and cash flow forecasts. Diane Kennedy is a CPA and founder of US Tax Aid. She's a best-selling author and a tax strategist who's been advising successful business owners and real estate investments for over 30 years. In my first call with her, I took away an insight, so I'm sure you guys are going to get a lot of value from her today. And Elizabeth Gore, who's co-founder of Hello Alice. It's a financial technology platform that's helped over 1.5 million entrepreneurs access capital and resources. Elizabeth is also the host of Yahoo Finance's The Big Idea and an Inc. magazine small business columnist. Just a couple housekeeping things before I hand it over to Kevin. Our presentation is going to run about 45 minutes. As the speaker presents, please type your questions in the chat or in the Q&A box as they come to mind. We'll be keeping an eye on them. You can +1 if there's a question that you saw someone else like, and we can identify what's really catching people's fire throughout the session. We'll hold all the questions till the end of the presentation and then open the floor. And in the very right-hand panel, you'll also find some offers and handouts from our session speakers, or you can visit the resource room to see a full list from everyone helping us out today. So with that, let's give a warm welcome to Kevin, Ryan, Diane, and Elizabeth.
Thank you so much, Lisa. And I'm so happy to have the three of you here today, now that Lisa just disappeared. I can count everybody, don't worry. But yeah, so this should be a good chat. And again, if you're one of the 200 plus people joining us today, feel free to ask questions to each other, either in the chat or pop things into the Q&A. And I'll circle back to those sort of at the end of the session. So I will start with you, Diane. Would love to sort of chat a bit about, the elephant in the room, which are S-corps. So everyone's heard about them, but when would you say it makes sense for a solo to actually make that election?
Well, there's a couple things to look at. A lot of people are looking at it based on tax savings, and you definitely start seeing tax savings at about $60,000 of net income. Let me throw another idea out, though. As soon as you become an S corporation, you get a little bit more cachet. The banks are more likely to see you as a real business. It's easier to get loans, and you can start building that business credit a lot better. It's interesting that business credit will get you a lot more money if you are looking for a loan than personal credit will. So like if you can go to the bank and get a $25,000 line, I mean, once your business is established, you can probably get 10 times that. So it makes sense to get started on that path as soon as possible, even if you don't have the tax savings right away.
So that's super interesting. So tell me more about that. Now, why would a bank look more favorably upon the same business if it just has a different structure?
I think it comes down to what bankers are taught to look for. And for them, somebody walking in and it just has what we call a Schedule C or sole proprietorship, they're thinking, okay, this is just a hobby. Somebody's selling something on eBay or something. Not that they can't do really well with that, but it's still something that doesn't feel like they're serious about it. Once it's a corporation, it's like, okay, we have a different form. We have different kinds of bank accounts. We can offer you credit cards. There's a lot of things that we can do because now you've shown you're serious.
Interesting. And again, I think that's something that maybe a lot of solos don't understand is that just putting yourself on paper like that and showing that you're serious really does, signal that to other folks and institutions. I think sort of in this, I think part of this is also around this transition of being like, I am an independent contractor maybe versus like I run a business. And I think like Elizabeth, I think in a similar vein, I think a lot of folks also struggle with the idea of like a transition from like I'm making money towards like I'm building wealth or I'm building a company. What do you think is sort of like the fundamental shift in that, like in thinking that kind of needs to happen for folks to sort of bridge that gap?
Well, one, I want to tell people to please pay yourself. I know that sounds basic, but so many entrepreneurs and small business owners, frankly, wait too long to start paying themselves, particularly women, statistically speaking. And so really understanding what do you need, frankly, for you to be a healthy leading individual so that you can run an effective business. So obviously healthcare, childcare. And then, yes, early on, I think you should be putting money away for your retirement as well. And I know that's the last thing when you're trying to make payroll and all these things, but it is important that you are a sustainable leader. So I just wanted to start with that basic fact that seems silly, but I'm always so surprised. I made that mistake for so long. And then two, start before you grow the business, really start understanding what are the matrix I'm putting in place to A, put money back into the business, B, put money into growth, C, pay myself and my employees, and then D, save for my own future. If you can actually map that before you even start based on your own personal lifestyle and your needs, I think that is also really critical. So, and Kevin, I just have to say, I love your dog. It
insisted upon making,
I'm traveling and I miss my kids and my dogs. So that just makes me so happy.
He's an honorary Lettuce employee.
Yes. So I just wanted to open with that. And in a little while, we can talk about, the difference in growth capital, capital just to maintain your business and then capital during emergencies, because I do think those are all quite different. But let's just start with the basic of budget out in advance. One, some people, the mass majority of folks also have a job while they're starting their business. And so I should take a step back and say, how much income can that business be bringing in before you quit your day job? So I had to do that. I worked for Dell while I was building Hello Alice. And so I missed that step because that's even a pre-paying yourself step. So map all this out and, your income level, where you live, do you have childcare, elder care, all that should factor in. So it's almost your life plan before your business plan, frankly.
Very interesting. And when you see people like not paying themselves to start, do you see them sort of just squirreling money away into the business or feeling like every dollar needs to be invested back into growth? Like, what do you?
Most of the time, it's pre-growth. It's really when they're launching the business. So, every paperclip, has a price to it. And so, and then I even see it, maybe they'll err on hiring that first employee before increasing or paying themselves. But it's hard for you, again, to manage larger agendas and more people if you're not paying for the things around you that allow you to go more into the business, is the way I think about it. Because there are things that only you can do. So, oh my gosh, Jessica, I'm so glad you got a grant from Hello Alice. That makes me happy. Sorry, I had to pause and say hi to Jessica. I got shocked by the dog and Jessica, so I'm really excited.
Great. No,
Anyway, those are my initial thoughts, if that helps, Kevin.
yeah.
I think part of not paying themselves too is a function of maybe not fully knowing family expenses or household expenses to know how much like actually needs to be pulled out. And then ultimately that comes up to like, what does it cost to service the dollar that you make? So knowing more of like your margins as well. So it's all kind of like systematically related, but I think to tag on Elizabeth's point of just understanding your family and household costs too, so that you know more how to pull out of the business.
Totally true, Ryan. And another thing I'll say on Ryan's point is there will be things that only you can do in your business, whether you have one employee or 100, and to really pay for and outsource other things so that you can spend more time in that piece is another way to think of it. Like you're a commodity, just like anything else in your business. So, there are things that, you would be better spent to pay someone else to do. So you could do kind of the larger margin work. So if you have this, self-worth or whatever you're thinking about, think of yourself as a product or a commodity or an employee of the business, not just the founder.
So question here to kind of pull in Diane is, say we convert to S-corp here and we're making just enough 60K in profit. We'll say we want to throw ourselves on salary, but we're not quite making enough to pay a lot. How do we do it? Like, can we just take distributions still? And it's kind of like skirting by, or?
Great question. And it's interesting because the IRS and tax court have addressed that very same thing, because often when you're starting out, they realize that, especially if you're bootstrapping, you don't make a lot of money in the beginning, and anything you're making usually is going back in the business. You have to stay pretty liquid. So I kind of use the rule of thumb usually of about a third for salary, unless there is some event or you need to save money for some reason. So you're buying some equipment or something like that, and so you need to leave the money in it. The problem you get in with the IRS is if you don't take any salary, because they can, and I've seen it, they'll come in and say, okay, all of your income is now subject to payroll tax, and you get a penalty because you didn't pay it. So even if it's a small salary, it's better than no salary. In the case of a $60,000, I would say pay yourself $20,000, pay a third of it. But as the income goes up in the company, then your salary goes up. And you're looking for, the rule is reasonableness, but it's hard to be, how is being a bootstrapping solopreneur reasonable? You're working hours you wouldn't hire somebody else to do and doing everything. So it is a different standard.
So being in seeing people's books, say it's less than a third, say we have 10 grand of profit, like after expenses, like, all right, am I going to put myself on payroll for that? Or like, am I going to get slapped if my business isn't profitable right now to where it even makes sense?
That's a great question, Ryan. And at that point, I wouldn't worry about it. I mean, anything less than 20,000, I wouldn't worry about, because you're just like one bad month away from being at a loss. And so it's not enough to really worry about that yet. However, for people that are diligent, I mean, they say that the average person has got 2 years of loss and then it goes to profit, and it won't be long for that to turn around. And again, depending if it's service business, usually profit turns faster than like product sales.
Yeah. Ryan, I think sort of a question to you. I think we're talking a lot about like, understanding basically a lot of like the expenses that you need for your life and like your runway and how all of those things intersect. And I know like you talk a lot about bookkeeping as like a strategic tool. And I think a lot of folks maybe just see it as like a tax time necessity. What's like one way that maybe they could start using their financial data a little bit differently?
Well, I think first, if you're thinking of it as tax time kind of necessity, you're kind of already losing or behind on the game of business. And I know that a lot of people are in that boat, but I'm hoping maybe we can shift you to getting ahead of your tax burden. And so I guess the first thing to do is maybe meet you where you are and stop using just bank balance budgeting or bank balance feel. Like you shouldn't be running your business by like, okay, I have $1,000 in my account. Like I can afford this. I think it's zooming out and becoming more strategic. And so the first step there is unfortunately cleaning your books and getting everything accurate. So then you can start to create informed strategic decisions. So cleaning your books is getting everything updated to current. So then you know the trends going forward. And then the next step is just keep it simple, create a forecast going here through year end. So 2 months, and that gives you like 2 months of runway to play with, to plug your numbers in, see where you're going. And then like there's the start of your roadmap.
I'd also add that books are the most important thing that a tax strategist has. I mean, if you're asking me in March March 2026, how you can pay less tax for 2025, we should have had this conversation 5 months ago, because there's very little you can do. And other than that, I've got like a magic 8-ball I can shake up and tell you what your taxes are going to be. But if I don't have books, I don't know what the numbers are. So you need someone like Ryan on your team who's going to provide timely, accurate financial statements, because come tax time, you're going to save a lot of money if you've got that.
Yeah. And I mean, if you think of it as, say we get everything cleaned up and you have the ability now, and you go to Diane and ask her, what do we do? We're in November, so we're in the current year. We have like, here's our estimate of what taxes are going to be. And now we're making strategic decisions because we're on the front end of our tax burden.
Exactly.
That makes a lot of sense.
If I can add, for those of you small business owners who are just getting started, and I want to make sure that you're using the tools that you have and don't get overwhelmed, particularly now with AI. Really, it's so hard to, if you're have a specialty, so you're a baker and you're focusing on what you're baking, if you're a creative, but you got to take time to work on the business, not just in the business. And so if you can actually, this is so nerdy, but carve out some time on your calendar every week at the same exact time, and actually use the tools that you're probably already paying for. So I'll use PayPal or QuickBooks or Lettuce or any of these folks. If you really get in there and do the tutorials, actually, when they say, here's a suggestion on how to best use this software, believe it or not, that will help you. Then you can actually, in a much faster way in the future, dig into the data that will tell you how you're doing. This product is selling more, this expense is, it seems to be going up and down, it's not stable. But if you use these new AI tools that are coming out of all these softwares, you don't have to be a deep expert to figure this out. So I just highly recommend that. And a way to do it, because it's not our funnest task in the business, is, okay, every Tuesday at 9, I'm going to spend an hour, on Thursdays at noon, I'm going to do this no matter what, and carve out that time, but not just to execute what you need to get done, actually try and learn the software, so that, it gets repetitive, it gets faster, and then you're using the data that these groups are providing you actually to make better financial decisions in your business.
Yeah, I think that makes a lot of sense. I think in addition to sort of that, like that sort of habit, I know, Diane, you've mentioned, or rather, Elizabeth, sorry, you've mentioned that like AI adoption among small businesses is really low, like only like 8.8%. What do you see as some of those early first steps, like outside of what is a more likely like a tangible way that perhaps someone could use a tool like this, maybe if they find it to be a little intimidating to them or not necessarily their first instinct?
Well, I don't want to do a commercial, but Lettuce is a perfect example. If you're utilizing Lettuce, don't just input cells. I know that sounds so basic. Actually utilize, like, learn the tools, download the tools, take the tutorials. I mean, that is actually will help you so tremendously, but then you've got to do it every week. I mean, you need to see trends. I mean, you will learn so much, and the best money is the money that's you already have that you don't spend. So if you can see, this is lopsided spending, this isn't working, or two, like, which products are selling more than others? You might think that you love, let's just say you have 3 shampoos you're selling and you love them all, but suddenly you look across 6 weeks and you're like, okay, frankly, only 2 of these are really selling off the shelves. And then look at unit costs is the other thing. I love this pastry, but actually it costs more to make. So even though it's selling more units, it's actually not profiting. So if you don't use these tools that I know, that are out there, I think that's really critical. The other thing is, like, with Lettuce and their financial planning, I feel like Diane, you made a really good point, and Ryan too. Like, don't just go right before something's due. If you use it consistently, and learn, and then you can actually, when you meet with your accountant, when you meet with your financial planner, you'll be more educated to help make better decisions, because they're experts, but you're the expert in your business.
Makes a ton of sense. I think, Ryan, I think a question for you, sort of, when we're talking about these different things that folks, Elizabeth is saying that folks should be tracking within their business. What do you see as the biggest gap between what maybe folks might think they should be financially tracking versus what actually matters and moves the needle within their business?
I think tax talk is a real thing where, a lot of people will go on TikTok and just find the newest tax rules that are big and fancy, but when you don't have you don't have the basis for the strategy, it's useless information. And so I think that's probably an area where people obviously get sucked to, because they're like, oh, I could save $100,000 by doing, like, renting my house to myself or something, and there's no basis for it. So I think you go from basically that to just, like, what actually is needed is maybe understanding margins, which is sort of what Elizabeth was just talking about. Like, say you have an offer that's $5,000 a month that you're making, but it costs you $4,000 to deliver it. So you only have $1,000 flowing to the rest of your business. Whereas, say you have an offer that's $2,500, but it costs you only $500 to service, you have $2,000 as margin flowing through the rest of the business. So in that scenario, like, offer the cheaper service that provides you greater margin. And so I think just simple things like tracking your margin by project or however your business is broken down is something that will move the needle, and then ultimately give you the predictability to stabilize your income, and then to ultimately grow a sustainable business.
Yeah, I mean, I think that makes a lot of sense. I know, even if you're not in the product sort of space and you're selling objects, like, if you're in the services world, like, I know folks who, work on project basis and don't necessarily track their hours on the individual, like, on an individual client, and, like, lose sight of, like, oh God, all of those late night random text messages and Slacks from that person, like, the mental burden that's, like, building up from this. Like, this actually isn't a profitable client. This sounded great on paper, but this has become a time suck, and it's preventing me from doing other things within my business. And sometimes even just emotionally, like, I'm so drained with dealing with this thing, like, I am unable to invest time in business development. And, like, it's sort of a softer side of, I think, like, tracking within the business, but just understanding, that you're making space and time for each of those individual things. I think, building on that a bit, like, speaking of, so, like, sort of catching some mistakes, I think, like, maybe a little too late down the road. Diane, I'd be curious to hear from you. Like, what would you say is maybe the most expensive mistake that you see solo business owners make when it comes to their taxes? Maybe something that costs them a lot, but is, pretty avoidable.
Okay. Well, first of all, I want to say, when you were talking about clients and projects that take a time suck, Everybody on this panel was nodding their heads. And I have a feeling everybody listening was nodding their heads too, because we all know that. That was such a great point. I actually I have three things. Lisa hinted at something earlier that when we were talking, we were getting ready for this a week or so ago. I mentioned that corporations are required to have an annual meeting. And I think a lot of people miss that, or they think, I'm a solopreneur. Who am I going to have a meeting with? You are required legally, every state requires this, to have a meeting. Now, here's the benefit of that. Anywhere you go, let's say you say, I'm going to have an annual meeting by myself. I'm going to look at these forecasts that Alice has been telling me I should learn, because I've got all these tools I can use, like activity download from PayPal, which I use, and that I can then take a look at that. And I'm going to go to Lake Tahoe for the weekend. And that put it all in my annual minutes on what I learned. The whole thing's a write-off. So that's a tax deduction. And so you've got something that's compliance, that you have to do it, and you end up saving money because of it. The other one that I see for people that are just starting, or maybe have started recently, my guess is there are things that you contributed to your business. You know, it might be your computer and your cell phone and your desk and the chair you sit in and those things. So if you bought those things personally, the business needs to pay you back for those. Make a list of those, come up with what the fair market value is, go on eBay or Craigslist or what, Facebook or Marketplace, find out what the fair market value is. And then the business pays you back. Even if you have to loan the business money to do that, you leave a trail. It's a deduction, not taxable to you. I see people miss that one all the time. And then the third is simply, where do you spend money personally that could be a business deduction? And the rules are vague with the IRS. It's ordinary and necessary to the production of income. That's the actual terms. So as a CPA, I'm not going to write off a lot of things that Alice is going to do, because, she's on stage all the time, and, she has a brand personality, and there's things that she's going to be deducting that I'm just sitting in an office doing tax returns. It's like I won't have the same deductions. And Kevin, we are going to turn your dog into a celebrity so you can write off all your expenses with your dog, because everybody knows your dog.
One of the expenses maybe I could write off is this AirPod that he ate this morning.
Done.
So, I couldn't find it. I was like, well, he found it. Anyway, I think really quickly, Diane, there was a question to build on that, which was around those annual reportings. Do the annual meetings, do even like a single member LLC need to, do annual meetings even apply to like a single member business?
Okay. So yeah, if you have like a single member LLC and but typically most people will do, like Lettuce recommends, and I do as well, that you start with an LLC and then you elect S-corp treatment. And there's a long conversation on why that's the best way. It gives you better asset protection. But if you just stay at the single member LLC, you're going to report your income as a sole proprietorship, and you pay more taxes because of that. You've got a 15.3% self-employment tax. That's why we always say elect S-corp treatment, but that's what you avoid. But does an LLC that doesn't elect corporate status need to have a meeting? Some states, yes, some states, no. It depends on where they're incorporated or where they formed. We recommend everybody does it. There's nothing wrong with doing it, and you get the write-off, and you have a good record because you've got minutes. And these are the things in the first year, 10 years from now, it'd be kind of fun to see what you were talking about a year from now. And I guarantee you, if the IRS audits you, they are going to ask for your minutes, even if you aren't required to have a meeting by your state. They're going to want to see that. That's going to be on their first list they ask for.
Good to know.
I think partly too, obviously I mentioned the thing about tax talks and Augusta Rule. I think that kind of ties a little bit into like, okay, that we watched the TikToks, we're aware of that. Now, how do we legitimately apply that? And then that ties into what Diane just said of you're required to have a board of directors, and your board of directors can meet at your house for a day or two. And then what's the fair market value of rent for that? And then there's a legitimate way to apply that rule. So, yeah.
As opposed to just winging it and deciding you're going to write off
as opposed to saying I can rent myself 14 days a year and it's $5,000 a day. for just applying it legitimately.
Yeah.
That's,
And then
that's
I
not gonna
think
work.
also something that we've seen come up too is, the Augusta Rule that Ryan is mentioning is the idea that I guess it was actually created for the Augusta golf tournament and like the rich people who lived around it, so they could rent out their homes for a certain number of days a year. What we've seen with some folks though, and this has sort of gone viral a bit on like TikTok as like a tax hack, just rent your house to yourself. If you use a business use of home, you also can't, then you're saying 10% of your house year round is your business. So you can't also rent your home to your business if your office is in your home. So that's another one where people get, so,
Okay.
on TikTok,
Case in point.
Can I say this, what y'all aren't saying? Don't freaking use TikTok for taxes. I'm like,
thank you. Oh my God.
I'm sorry. Maybe you see it, but like, you need to check with Lettuce or your accountant or your financial advisor.
Yeah.
So let's just be really careful there. Second is laws. Well, when the government's not shut down, laws change so fast that even if you were right the year prior, you still need to ensure that you're doing that appropriately and legally. And then I want to also make sure y'all know that when you do, because you're all going to kick ass and be amazing, expand to other states, you need to make sure you're following tax law wherever you are either selling a product and or employing a human being. So I also wanted to say you might see something on TikTok that's great for Texas, but not California. So I'm just going to just be the one to be like, be careful here, There's a reason these people are certified and they are. And here's the other thing I'll just say is I think, Ryan, you asked Kevin just about like where you can lose money. And I think the other thing, other than not paying ourselves, that is really tough is some of the services we need to pay for, but we wait till we have an emergency or we need them. And that's legal, it's accounting, and cyber. Those are the three that I get concerned about, that if you pinch now, it is going to cost you later. So, from a legal standpoint, just ensuring you're buttoned up, that you do have even local counsel that's reviewing your documents. Two is you really need to have a certified accountant looking at your books, because that can really bite you later. And then I bring up cyber because 50% of small businesses under 5 employees were a recipient of a cyber attack last year. And so it is an area where, particularly with open records these days and so on, that you need to invest in cyber software, cybersecurity. It's not that expensive, but I know it's not what you're thinking about as you get started. But those are 3 areas that pay now or you're going to lose money later.
Yeah, great points. Kevin, could I jump back to the Augusta Rule? Just because, and Elizabeth set me up perfectly on this because the law changed. We've had 2 court cases that have said, yes, you can rent, like let's say 10% of your house is your home office, and you do that. And then you say, well, I'm going to rent the entire amount for a video or for my business meetings or whatever, and do the Augusta Rule. The 2 court cases have allowed it to be done. You can do both, as long as the Augusta Rule has got really good contemporaneous, in other words, written at the time, notification on what it is, what you're doing, what happened with that, and that the fair market value was that you found that. The Sinclair case is one, and I can't remember the case of the other one, the name of the other one. But it's wild because tax law changes like every week, depending on what happens with the courts.
Yeah, which is why it's probably, I think, as everyone's sort of saying, makes sense to be, keeping a good documentation of stuff, just taking a few minutes every week.
Yeah.
Actually not that hard, and to start sort of like making some plans. I think that there's a whole bunch of questions that have been, I think, like popping in here. And I think we've answered a fair amount of these. So I think this is one that's I think fits in some of this that we have. That's Catherine's asking is like, we're talking about, like, you're saying like, hey, in March, if you say, how do I save on last year's taxes, you don't really, you're kind of like good luck. But, so how much do you need to plan your deductions in advance is what Catherine's asking. And I'll throw that out to anybody.
Well, if you need to have good bookkeeping. And so until you have that, you're kind of guessing. Like Ryan is, clearly he's a fractional CFO and he does more than just bookkeeping, but both what his work is and what mine is starts with bookkeeping. And that's got to be accurate and timely. But if you missed it, I mean, still there are things that you can do that will make it maybe a little better. There's some retirement plans, for example, you can add later, like a SEP, self-employment, forgot what it stands for, SEP IRA. And you can do that. You can set that up until the filing date of your return. You can't set up a solo 401k though. That has to be done before year end. There's chances are if you were looking to take a write-off and, I was thinking about buying this new computer and I didn't buy it. Well, you're not getting the write-off on that until you do buy it and put it in service. So there's a few things, but you're leaving a lot of it on the table if you haven't gotten things planned ahead of time.
Makes sense.
I think the short answer is just within the year. Like, obviously, if say your books aren't clean today and we start a cleanup, like it's kind of unrealistic to expect a year of bookkeeping to get done in like a month with holidays sprinkled in too. So like that gives, say in a perfect scenario, your books are done the beginning of December, then that gives you 20 days to like maybe put together a tax strategy where you're like, okay, I have some options here, but the short answer is just within the tax year is kind of the way to get the planning. And then it's ultimately about like deferring expenses or pushing expenses. Sorry, the other way around. Pushing revenue out or bringing expenses forward to kind of figure out how we can adjust tax due.
Makes sense. Elizabeth, question for you. I think this was I know because we're coming towards the end of the hour, but Diane just brought this up, which is retirement planning. Something that I think maybe a lot of solos think like, oh, I work for myself. I don't have a 401k anymore. Time to just squirrel it away in the mattress or do whatever. Like, what would you sort of, I think, say to that and sort of like thinking about retirement planning, maybe without the employer match? What should folks be so focusing on? And also like, what's a first step?
First step is to do it. So even if you're putting $100 a month in, it is important for you to start. There is a lot of softwares, a lot of abilities for you to build your own 401k. And you just have to be disciplined and think about what can you afford and think of it as a cost of doing business, not of a personal, whatever. I don't know the word, but you need to start putting it in the day you start your business and forget about it. So just like you would if you were employed by someone else, that you're going to put a percentage in and they're going to match it. You need to go ahead and put a percentage in, every month starting from the beginning. I'll also say for folks with children out there, also thinking about putting your, Diane, you'll know better than me. I can't remember what they're called right now, but there's, tax-free college funds that you can be putting in $50 a month the day you start your business. So I know that sounds silly, but again, do it, start it, do it as cost of doing business, check in on it monthly. It's really critical that you do that. Thank you, 529s. Thank you, Kevin Farley. Your 529 account again, and most of this, have also great tax incentives for you. You'll be shocked after 2 years. You're like, oh my gosh, I actually am growing some retirement. Now, when your business starts actually making an income, then I would go back to your accountant, your financial planner, and say, what is a better way then? Is there a different account? Is there more money I should be putting in? Are there multipliers? Does my state have benefits around this? So I would, continue to put that on the calendar. And I wanted to back up something Diane said about your annual meeting. Another way to think about that as a solopreneur is that every 6 months you have your own board meeting by yourself. But that day, meet with your accountant, meet with your financial planner, meet with your lawyer, meet with, these functional parts, like put it on the calendar every 6 months to meet with these professionals. So it's always there. You do not miss it. Ask them for an agenda ahead of time. And that's another way that you won't, I think, be so busy that it's gone. So just a couple of things to think about there.
Yeah, it makes a lot of sense. One thing to sort of clarify for some folks, I think on the idea of solo retirement, because I think this is something a lot of people don't know. People think like, oh, my 401k, I can put, say 20K a year in it as an employee, and then they go work for themselves, and they might think that that's still their cap. If you are a high earner, how does that sort of like? Could you elaborate a bit on maybe how like that retirement planning changes if you are both if you work for yourself and have your own business?
Well, this is where I go back to you need to check it every 6 months, because that should change, right? As your income changes, as the way your business is structured might end up changing, your financial needs might change. So again, you can't, I said like put it in and forget about it, but that means it's making money every night for you. But you have to go in and see how that changes and evolves. And as Diane said, the laws could change. You could maybe have better benefits. Congressional laws change on how much you can put in. So you need to go in. That should change, Kevin. Actually, it should iterate and evolve as your tax brackets, your income, and your company grows.
Yeah, definitely.
Yes. If I can just add something that I see people get confused with too, is the amount that you put in is dependent on the amount of earned income you have. And so, part of what you're doing with the S corporation is that you've got a salary, that's your earned income, and then you're going to be taking distribution, which is not earned income. So you might have a business making 100,000, but your salary is only 30,000, and so your amount that you can contribute is going to be based off that 30,000. So and there are different plans. It isn't always that you can only put in a certain percentage of that amount. That's where you start looking at different types of plans that might be best for your circumstances.
Yeah, so it is based on that percentage. And I think what also folks, can understand too, is like if you are a high earning solo, maybe sort of, I think this is often the case in like services business and like consultants and stuff like that, where you can actually contribute both as the employee and the employer, which allows you to put in like up to this year, it's like $70,000 in total. Again, as long as it falls within that, like, I think it's 20% threshold if you're a sole proprietor, or 25 if you have an LLC. So you have to be making a significant amount of money, but it allows you to write off a lot. And I think there was a question from like Mike in the chat about understanding, when to do this. I think that's something that's helpful for folks to know is, Diane, you had mentioned that if you have the account open, you can put money into it up until the day you file. So you could work with your tax professional to say like, okay, hey, this is how much I made. How much can I put in order to like pull down my total earnings and reduce my taxable income? And you can decide, you don't need to decide that by December 31st. You can decide that before you file. So you have some flexibility to say like, oh, cool. Yeah. So actually I can put in 30K and now I can actually work for 2 months and kind of squirrel up that money.
More money.
And then be able to put it in and then like, look, I'm getting a tax rebate instead of having to maybe owe. Okay, well, we're just about at time. So we had said that one thing we wanted to end with was if each of you could maybe do one action item that someone could do like this week to improve their financial situation for their solo business. I'll start with you, Ryan, and then go to Elizabeth, and then Diane. You close.
Didn't get to talk about this too much more, but I think something to do this week is just create a cash flow forecast. Start with log into your bank account, pull your bank balance as of right now. Then you can basically go down to estimating what money is going to come in basically by week. And then same with what money is going to go out. And then that gives you your estimated cash balance. And then I think that's just a very easy way to get your runway through year end without getting too deep into financials and clean financials and everything.
And it's a great one. And it can be super simple. It could be a little Google sheet or Excel
Exactly.
sheet just to start. Elizabeth, what would yours be?
Yeah, mine is actually, I'm more take the time, put 2 hours a week on your calendar to live or die by, where you actually are working on the financial infrastructure of your business, and don't skip it, do it. And then I'm stealing Diane's idea of every 6 months, do a board meeting with all of your professional services folks to go deep on all of it.
Great.
Diane?
Okay, I'm going to say just take your bank account and go through where do you spend your money personally. And for every expense you've got, ask yourself, how could this be a business expense? Because I find that a lot of people just getting going don't realize what's deductible. Just kind of to throw out there. For example, if you're a content creator, your video, your ring light, all of those things are going to be deductible. So the answer is different for all of us. How could this be a deduction?
Makes a lot of sense. I love those as 3 things. So to sort of like recap, create that financial cash flow forecast, start dedicating a little bit of time every week to dedicate and to focus on this. And then my brain just died. How did I forget the third one? Oh, and then go through everything that you're spending and see, could this be a business expense?
It's okay.
Wait, you forgot one. Don't let your dog eat your ear pod.
And don't let your dog.
Yeah. Oh my God. Put the ear pods up. Yeah.
During the event. Anyway. Okay. Well, thank you all very much. I know there's more sessions coming up. I really appreciate the time, Ryan, Elizabeth, and Diane. And yes, thank you everyone for joining us and for keeping the chat so lively and the Q&A so lively. Really appreciate everyone being here. Okay. Thank you, everybody.
Take care. Thank you.
Okay. Bye.